There are many financial products available for sale: annuities, life insurance, disability policies, and the list goes on and on. Before you buy a product, if you want a second opinion, call us at the Financial Enhancement Group at 800-928-4001 or go to yourlifeafterwork.com. Tell them, hey, I want a second opinion before I buy this annuity. How much life insurance do I really need? The questions you have, we will help you provide answers based on your situation, acting as fiduciaries, not as salespeople. Again, it's yourlifeafterwork.com or 800-928-4001. Good afternoon and welcome to Your Retirement Playbook. I am your host, Joe Clark. I hope you're having an outstanding day and ready to roll. We are talking about that nasty little pesky intruder into your retirement, inflation. And if I sound a little happy about inflation, it's not that I'm happy about inflation at all. It could possibly be a little bit of I told you so, but that's not the case either. What I want you to understand is that we get caught on all of our journeys on short-term situations. Now, I'm going to try to make this as easy as I can and radio-friendly or YouTube-friendly as I possibly can. But, you know, sometimes you have to be graphic. People ask me how I had such success with keto, right? That's the diet. Keto is where you have almost no carbs and you just eat proteins and fats. And Barb and I did it for 18 months. I think she maybe cheated twice, and I did not one time for 18 months. We lost over 100 pounds between the two of us, about 130 pounds. It was a very, very successful period of time. And yes, we have been fortunate enough to maintain and to keep most of that weight off. Here's the point. People said, how in the world were you successful? And like I've told many of you on this radio show, it's very, very simple, right? See, life is like a Cheesecake Factory menu, 250 options. The more money you have, the more options you have. Right? And we all love choices, but we hate decisions. See, we're humans, and we're easily flawed or fallible when we have to make a decision because it almost always comes in a moment of emotion. Right? I set an 18-month goal that January 1st of 2020. Actually, it was 2019. I set an 18-month goal and said, here's when we're going to be done. You know, you don't have to do this, Barb. This is me. I'm doing it. She goes, I'm not cooking 2 dinners. I'm in, right? And so we set an 18-month target. We knew the beginning date. We knew the ending date. We knew what it was we were getting done. I had made a decision, and it was not necessarily appreciated by all people concerned, doctors, other family members, kids, etc. But it was a decision that we made. We made the decision, and we were going to go. Now we had to stick to it. And here's what I told people. They said, how did you survive? And it really is not giving yourself the ability to make a new decision. Right? So if you think about it, I have 2 dogs. You know what they have to do out in the yard, right? We can all think about it. And when I go out to the yard and Rupert or Othello have been in the yard and doing their business, I do not walk by their experience and say, I wonder if I want to take a sniff or a bite of their business, right? Now, I know that's graphic, and I apologize. It's early Saturday morning. You can live with it, right? I don't have to ask myself that question, right? I don't want to know what it tastes like. There's not a question I'm going to eat it. I'm not going to do it, and that's how I viewed anything that was sugar, bread, donuts, sweets for 18 months. I simply was able to say no because I didn't give myself the ability to have a decision or to make a decision. When I went to a birthday party, I didn't say, well, this is my nephew's only 7th birthday. I have to have a piece of cake. What would my mother-in-law think? I didn't have any of those things because we'd already made a decision. Now, I'm not telling you have to be that rigid with financial planning, but where people get into trouble is when they make momentary decisions that impact long-term journeys. And let's face it, you do not hire me at the Financial Enhancement Group for everyday decisions. You hire me for long-term decisions and keeping you on track, making sure you're pointed in the right direction. Our families that we take care of do not call us every day. They may need us for 10 days out of the year when there's massive market volatility or major financial decisions that have to be made. You don't have a doctor to call every day. You have a doctor when you're sick or when you need your annual physical to make sure you're on the right page. We're really no different. It's not the service and the value we provide every day. It's when we provide it the most important days, and it's making sure that you stay on track. How do I keep me on track? I am a human. Well, I've done it through the fiduciary focus for years and years and years. And you've learned that if you've been on this show. The fiduciary focus are these 4 areas. They're the things, everything, in my opinion, need to be measured with, right? So think about an ingredient. You got carbohydrates, part of that's fiber, part of that's sugar. You've got protein, you've got fat, right? What are the ingredients? These are the ingredients in the decision-making process. What does this do with risk and volatility? I do not have to explain risk or volatility to any of you today. All you have to do is turn on any news channel and you will see risk and volatility in the market going higher or lower on a daily basis and wondering what in the world is going on. Fees and expenses have always kind of been bad things that are out there that are lurking. But just remember, most of the expenses now are stealth. They exist. They are problematic. They are painful. And we probably make a large percentage of our value for our families. Our trade-off is eliminating expenses that you have in your portfolio that you didn't even know you had. My objective in that first year is to try between tax savings and reduction of expenses that you don't know you have to cover our fees that we charge at the Financial Enhancement Group. Typically, when you look at an actively traded mutual fund, you pay us, people you know, who do full financial planning and help you manage the money, less than you're paying a manager in Boston that you've never met, who doesn't know you, who doesn't even know your goals and objectives. Just as a side note. Fees, risk and volatility, fees and expenses. The third is taxes today and tomorrow. Nobody I've met likes taxes. We all wish the person who made $1 more than us paid more in tax, but not us and below, right? I mean, that's just the advantage. So people, when I talk about taxes, that resonates with some people. But for the last 10 years of my life, when I write real return, and real is inflation for all intents and purposes. It's 0 plus whatever the inflation rate is, you have to get to break even, right? When I put in real return up there, the last 8 years, people kind of looked at me like, Joe, come on, give it a break, will you? Hey, remember, you're not always going to be on keto. Carbs aren't always going to be bad. Protein's not always going to be good. There probably is a limit to the amount of fats that you should have. But every ingredient on the back of that container over my lifespan will matter. And every one of these 4 things in your financial journey will matter. There will be times when volatility, the market's done nothing but go up from 2012, had a little hiccup in 2016, into 2018, a little hiccup in the fall. Between September and October. And other than that, we were smooth sailing. Heck, the pandemic was less than a 30 or 35-day venture of the market going down, right? What volatility until all of a sudden you get here? But people knew that volatility could happen. Fees and expenses, because they're just regimented and most of them are stealth and people don't see them. They know they're problematic, but they don't see them necessarily. The taxes, a lot of people think, well, there's nothing I can do about it. They get their tax reporting back, not planning. Remember, they get their tax reporting back from their CPA. They write the IRS a check. They complain about it, have a drink or two, throw the tax return in the drawer, repeat, and do the same thing a year from now. Inflation, people believe there's not anything they can do with it. And the reality is that's not true. Your inflation rate really is unique to some of those decisions that you are going to make. You can choose to live in a city that has higher tax rates or lower tax rates. We're Americans. None of us are obligated to stay in the city that we live. We can choose the state tax rate and the municipal tax rate that we want to have. Now, do we have to make choices to buy and sell and move away from friends and family and our churches and maybe our job? Absolutely. I didn't say they were easy, but they are choices. When you look at inflation, remember, there are goods and services that both go into the inflation factor. The largest component in the service sector, which is the largest part, by the way, a lot of people said that things changed in the 80s when we started shipping everything to China or Mexico at that point in time. Please keep in mind the United States became a service economy in 1954. That's when more of the GDP was service-driven than goods-driven. 1954, before many of us were alive, and certainly before the peak of the baby boom between 1957 and 1961. Things do change. You need to be aware of that. But with goods, those are washers and dryers and couches and microwaves, material things, tangible things that you can buy. Most of us do not need to go out and to buy them and replace them unless something is breaking down. We're already at that age where we have what we need. And when we buy them, you can buy something that is much more technologically proficient or efficient today than what you could 5 years ago for likely a lower price. There is actually deflation that exists inside of anything that is technology-based, just because microprocessors and everything else are so much faster and so much cheaper. It really is amazing some of the things we're able to get done. Services, on the other hand, go up, right? So you can choose to grow your hair out or to shave your head, right? I guess you don't need a barber if you have a shaved head. Currently, I'm electing the barber route, where I go and have my hair cut, but I have to pay for that. I can't go to China. I can't go to Korea. I can't go to Mexico to get my hair cut. I've got to do that somewhere in a local place. As the inflation rises, the price of services is increasing, and some would even use the word soaring. So what does that do to your retirement? Well, it doesn't necessarily do anything to your retirement per se. What it does is to your purchasing power. So if you got $1,000 last month and the inflation rate was up 5%, you only have $995 worth of equivalent pricing power that you can use this year. And I should say $950, right? When you think about it, if you had $10 last year, all right, if you had $1 last year that you were going to be able to use, you've got 95 cents this year. Let's just use easy math to make sure we stay on the same page. That's purchasing power. You still have $1, it could just buy less. That's if the inflation rate was 5%. Is it higher or is it lower? Different people argue. The last inflation number was above 9%. A big part of that is in service. You can make the choices on where you spend money, where you travel, where you live, whether you have somebody mow your yard, whether you don't. Service side is going to be more expensive than the others, but just because it's been asleep for 8 years doesn't mean it's not real and impacting your retirement. There is more things to talk about inflation than we have time. Go to yourlifeafterwork.com, read some of our articles, sit down and have a next steps meeting. Again, it's yourlifeafterwork.com.